Fellow option traders, all our buddies that trade options, it's time to have your eyes opened up. Yesterday on 9/9, the 1810 call chart, 99% of the people never seen a call chart, let alone how to use it, but they're trading options. Doesn't make no sense to me. Now, listen, we're market makers in the option pit. We compete with all of the exchanges around the world. $41 a contract yesterday. Today's low, $13.50. Now, it was totally inflated. Let's go over here now, my fellow traders. Yesterday's high on Amazon was $18.50 on 9/9. On the low price, when you take a look, that is down $45 to the low price right here, which at that point gave what we call, by using the call charts, and we look at the put charts, this was deflated. Let me just say something over here. Whether it's call charts, put charts, or whatever it is, when they're inflated up here, it's impossible to stay up there, mathematically. When you get totally deflated in the call chart like this, it's impossible mathematically for them to stay down here. They're going to go higher. So when you're looking at a market maker that makes the market against the retail option traders like yourself, they got the upper edge. The reason why you see these big drops from 41 down to 13.50 is because the market maker shorted that at $41 and he made all that money when it went down to 13.50. Yeah, they have the permission, they have the edge. Why? They're a market maker, they have to make a market between the public and they have the edge. Now, we do the same thing too, but we would just want to tell you one thing. This is where the lowest amount of risk is on the entry. The big guys were getting killed up here, and I'm only going back 2 days. These were even higher at one point. Now, let's go over to the high on Amazon one more time. That was it yesterday. We hit a low today of $18.05. That was a $45 drop in 2 days, my fellow friends, option traders, and it was. So, listen, when they get on sale and you drop $45, they just pop the balloon. And so, when Amazon was up here at the high, the contracts were $41. I'm a buyer at $13.50. I'm wholesale. I've taken out the risk. I was also watching the put side of the market go straight up, just like these calls went straight down on the put charts. And they did. So now they're inflated. And they can't stay up there mathematically. So, making a market is quite different when you're using the techniques that we have, and take the free 5-day trial. It's right here. So, once again, let us open your eyes up about these options using call charts, put charts. Let us open your eyes up about how the market makers work in the pit. We are market makers. We compete with them every day. But we know what we're doing. And we would like to share it with you. We invite you. Take the next step. Take your options trading to a new level that you don't know exists. Not the retail model. Hey, you can keep going down that and you're going to get the same outcome. That is not what really trading options is about. It's about making the market. It's about getting the mark down. It's about understanding inflated versus deflated. It understands about the wholesale entry. It understands what's happening on a 60-minute chart. When the reversals happen, they're always going to go up and down no matter what. But when you're in this free 5-day trial, you're going to watch us trading both sides of the market as a market maker. And let us take you down that road. You have nothing to lose. Open up your eyes. It's free. But I will promise you one thing. You will be very, very excited after you go through the process with this. And your whole mind and attitude will change. Because what you see is what you can believe. Once again, 1810 call chart, how to use call charts, how they got deflated, where all the risk is out of the trade. You got to realize earlier in the day, this contract was at $22 and they popped it from $22 back down to $15 right here. So getting that entry, getting wholesale is how you make money.